Hey, y'all. We're just here to talk about some things.
Bring up the rates. They're going up.
Some things that y'all want to know about.
Jay Powell talked on 60 Minutes a little bit ago. I was watching the interview. It's pretty good. Okay, let's talk about the important things in life. Okay, we got a whopping one right now. Whopping one. Here we go. Okay, we got a few now. Here we go. We're talking about rates today.
Gabriel.
Talking about
Stagel.
Stagel.
Mike. J-Lo. Brittany.
J-Lo's in the house.
And Brittany. 140 Kev. Kingsley. Flowers.
What's up, guys?
Welcome, y'all.
We're going to talk about some good stuff today,
Larry.
whether or not it's a good time to buy, whether or not rates are going up. They bounced up a little bit. And whether we think they're going to go up significantly, no.
Shara. Greg. I can hear me. Al. Hustle Fitness.
Wow, look at you guys.
Miguel.
We appreciate all of you guys. Hey, listen, interest rates today. Right now, if you went to the New American Funding website, you would see a 15-year at 5.75. That's way higher than it's been. It's been for the last probably 2-3 weeks, 5.25. And it's at 5.75 right now. FHA 30-year, 5.875. That's kind of static. 30-year fixed on a conventional 6.25 at the moment. We got some good stories here about buying houses and the escrows that we're in and how we can help you moving forward. So we just closed the one yesterday on somebody who met us on TikTok, right?
Yep.
Tell me what the story.
She saw our TikTok. She called us. She got her house. Boom! There's more to it. It's boring. You guys don't want to hear that boring crap.
Very interesting, man.
Yeah.
You are very interesting.
Dude, you pull out the best topics. Hey, man, tell us about numbers.
So here's what happened.
And math.
There was a builder. She was with the builder. The builder tried to screw her over. All kinds of bad shit inside of the contract. All kinds of bad shit. Client comes to us, says, hey, am I stuck in this thing? Am I stuck? Do I have to buy this from the builder? Do I have to? Our answer is, what's your EMD? What's your earnest money deposit? I don't remember exactly what it was, but let's just say it's $1,000. I said, are you willing to lose $1,000 to walk away from the deal? After looking through the process, yes, I am willing to lose $1,000 because I do not feel comfortable with this deal. If you do not feel comfortable with this deal, I don't want you in the deal. All right, I have another one that I think I like better. Well, I'll tell you what. If you're willing to walk from this and you want to move on to the next one, I'll have you pre-qualified within a day or two, and we'll get you an escrow within a day or two on the house you actually want. True story, just happened. We closed it yesterday. True story. That's a little more interesting. Yes, it's a little more interesting.
And you get people saying, hey, you need a copywriter?
Y'all need copywriters? Yeah, we've had some people say, hey, we need copywriter. What the hell is that profession? We've had people like literally come in and say, hey, I'm willing to be your copywriter. I'm like, okay, what does that mean? I'll write the words you speak. I don't even know how that works. I'm not like an actor. I'm not reading off a script or anything. I'm actually trying to help you get the house in 2024. I am a licensed loan officer. Chris is a licensed loan officer. We've been in business. When did you get your first license?
2006.
2006. I got my first license in 1992, and I help people get your home. And hopefully in 2024.
I need to talk to you, Clips, because I have had people reach out, and I've had conversations with someone that said they wanted to do that same exact thing.
Yeah.
And we teamed up, kind of. We gave him access to a bunch of stuff. He said he was going to write these emails.
Yeah.
And when it came down to it, he said, hey, can I just have a salary?
Yeah, I know.
So what I'd like to do is partner with someone and build something with someone and give everyone equity inside of it. So Clips, if this is up your alley, yeah, maybe we can entertain something. But if you're looking for a salary, looking for a job, we're not there with that part of the business yet.
Andrea Montañez. I like the little Enya.
Joyzy.
Doozy. I like Joyzy. So if you have a Jersey accent and you have to say the Montañez, I think that's the way you say it. Do you like, yo, I'm Montañez? I don't know. That's a horrible Jersey accent. Anyway, how you doing, Andrea? We're here to help you try and get a house in 2024. So what do we got? What do we got going on here?
Let's see what's up there.
Well, just real quick, I saw that real flash by. What states? All 50 states. All 50 states. Very few banks can say all 50 states. We can say all 50 states as of about 2 weeks ago. For years, we were only able to say 49 states. Everything but New York. Now we can say all 50 states. And we're here to try and help you get a house in all 50 states. Go ahead.
So clips. Why not pay instead of equity? Because I'm not looking for that employee. I don't need that employee. I'm looking for someone that can help and help build.
Yeah.
That's it.
Everybody's looking for a job. Everybody's looking for a guaranteed income. We deal with entrepreneurs who want to build something and make money off of what they make. Yeah.
So what is this, Yorks? This is a spot where you can ask about mortgages, real estate, what's going on in the market, what's going on with rates, what's going on with the trends, what's going on across the country. Because like Lee said, we do help in all 50 states. We do loans in all 50 states. Andrea had a question. She said, I have a question. Cool.
Okay, cool.
Ask it, Andrea.
Ask the question. We're here for you.
Junior Benche, I have bad credit. Can you guys help?
So it depends on what you call bad credit. So sometimes people have like a 618 FICO, which is not enough to qualify for Fannie Mae, Freddie Mac. You're only 2 points away. And with that, we have a computer algorithm, a computer simulator, where I can put you in and probably get you 5-10 points. But if you call bad credit 492, you're probably going to need a credit repair company. We do recommend credit repair companies, but there's a ton of them on TikTok. If you just dig into TikTok, there's a ton of them. We actually have one that we refer people to at the top of our links. We have some personal relationships with people, but it's not simple. It's a process, and you have to be consistent and dedicated. And if that's the case, you will get your credit up and you will buy a house.
Okay, Andrea, here's her challenge. All right, as soon as I say that, it just moves.
Yeah,
I'm currently working part-time, 670 credit score, $11,000 salary. My husband makes 50 G's, but that's not the problem. The problem is that, where'd he go? He doesn't have a social. Okay, so it's I-10. Lee, what's the solution?
Okay, so the solution is simple. Call us. We can do loans. Now, I-10 is a very specific loan. It's usually going to be 20% down. Sometimes we can get away 15%, but that's a very unique situation. I-10, usually 20% down, and once the loan is I-10, the whole loan is I-10. You can't do one person FHA, one person I-10. So the whole loan's I-10. At that point, it becomes 15 to 20% down, but it is doable.
All right, Christina Sanchez, I have a property. Is it possible to purchase another property with my equity?
You take that.
All right, here we go. Or borrow, what would work? How would that work? Okay, so yes, you can access the equity in your property. There's a number of ways to access it. You could do a cash out refi, you could do a HELOC, or you could do a second loan, okay? Second loans and HELOCs are probably more popular right now depending on your current interest rates. So yes, a very popular strategy. It is absolutely a mathematical situation that we're going to want to walk through with you to make sure it's a good move, because the name of the game for us is doing what's best for you, not just earning money, not just making commission. So we'll have a little conversation. We'll talk about it. We'll figure it out.
Chandra Arancino, we missed one. What's the difference between Freddie Mac and the other one you mentioned, which is Fannie Mae? Those are both GSEs, called government-sponsored entities. And when the market crashed in 2010, 11, 12, somewhere in that range, there was a set of laws that came in, and the government bailed them out. So when the government bailed them out, they became GSE, government-sponsored entity, because the government has some say in the guidelines. These are two separate entities, and they both have different underwriting guidelines. We actually have to go to different software to get you approved for Fannie Mae, that's Desktop Underwriter, or Freddie Mac, which is Loan Processor. And either one of these two, now they're pretty close, but occasionally one of them favors the other, one's better than the other. Like for instance, if you're self-employed and you only have 1 year of taxes that you want to show, then I can do a Freddie 1-year LP accept, which means I don't have to show the one, but I have to prove you've been in business for 5 years. There's certain things that each one is better for. By and large, they're both about the same. Sometimes pricing's a little better on one, a little better on the other, but we do them both, so no worries.
Andrea, so yes, even though you have a social, you have to use ITIN. The reason why is because the file's going to revert to whatever the worst case scenario is. So ITIN is worst case because it asks for more down, stronger FICOs. FHA has less down, don't need as strong of FICOs. So it just defaults to the worst case scenario. So yes, the whole thing would be ITIN. Oh, got a lot of questions.
Yeah, we got a lot of questions. We appreciate all of you guys on Facebook. Are we on Facebook? Yeah, we are.
Yeah.
On Instagram, on TikTok, and on YouTube. YouTube, we got a few people watching on YouTube. That's good stuff.
Andrea, you're welcome.
Yeah, cool.
Christina, is that wise also? Okay, Christina, let me talk to you about this.
That's
Because
wisdom.
You're talking about investing. You're talking about creating a business. You're talking about a situation where you might have some loss and some risk. So when you talk about wise, it is an option that you could go down. But know this. Because you're taking this step and you want to buy another property and you're getting into a situation of where, like I said, the risk increases, know that you have to accept the risk when it's on your side, on the, not the good side as well. For instance, you buy an investment property, you buy a second property, you take money out of your existing primary residence. Now you have a mortgage payment that you have to manage on both. What if you don't get a renter right away? What if you get a bad renter? What if you try to Airbnb it and you're not getting the kind of traffic that you thought you were going to get because the whole world is making billions of dollars a day on Airbnb, right?
No, they're not.
No, yeah,
They're not. They're not.
So,
They're not.
Is it wise? Well, if you're ready to take a leap and you have trust in yourself and faith that you're going to push through and you're going to be able to make it happen, then sure.
And study the market.
If you're a person who's just going to set it and forget it and think that everything just falls in place because you bought something or because you invested in something,
Nope.
then no. Yeah. So it really depends on you. So are you the person that's going to push through and make it happen? Or if you're not, then I wouldn't do it.
Yep.
So that's it. Tony Bows, 630 husband, 615 me. He makes $90,000. Will we get approved? Question mark. We're paying our credit. We're paying to get our credit repaired.
So Tony. That's
three.
Like that, dude.
Three.
That was a band or a group. Yeah, Tony.
Yeah,
I was mad at them for a while. So Tony. Here's the catch: if you are currently challenging your credit, the Fair Credit Reporting Act of 1987 says that while it's in the challenge, the credit reporting agencies cannot count it against you. So you have what's called a false positive, meaning your credit score is reporting better than it is because they're checking to see if these debts are valid. So what we want to do is dial in your actual credit report. If that was your credit report prior to challenging it, then that's a real credit report. But if that's the credit report after challenging it, know that once you remove all challenges, which you will have to do in order to get a mortgage, that is going to affect your credit score almost immediately. And the good news is that with the credit report score that you're reporting, we are qualified FHA. FHA is 580 FICO. 580 FICO, 3.5% down. It can be done. That doesn't mean you're automatically greenlit, you're ready to go. It can be done. Fannie and Freddie kick in at 620. So with your FICO scores coming in just below 620, the only one that I could get you qualified for is FHA or possibly VA if either one of you is a veteran. So there's a way to do this, and you are probably qualified right now as long as whatever brought your FICO down that low isn't prohibitive, like for instance a bankruptcy or a repossession in the last few days or whatever. So there's a lot of things going on there.
One Mezgua 1, will taking out a second loan affect her buying the home due to debt and hard credit check? So she's asking a question for the other person that was going to take money out of her home to buy a second home. Okay, so will it affect her? Yes, it absolutely affects her. So everything is based on what you can afford. So would we actually do the refinance if she couldn't afford the second home? No, we wouldn't do it. We would already math it out and go, here's what we need, here's what your payment's going to be. Doesn't make sense. Don't even make this step. So yeah, that's what it would affect her. Now, as far as the hard credit check is concerned, hard credit checks don't affect you at all if you maintain good credit. If you have crap credit and you're pulling your credit all over the world, at Best Buy to save 10%, at Home Depot to save 20%, or whatever the case may be, then yeah, it could affect you. But if you got good credit, you're fine. You got bad credit, then maybe. Andrea Montañez. Andrea, Could I use my mom as a co-signer and still get first-time home buyers even though she owns a home? That's the one that asked about husband Iton.
So the quick answer is no, but I don't think you're asking the right question, because if you went with Home Ready or Home Possible, which are the first-time homebuyer programs, it's not FHA, because FHA is 3.5% down. You don't have to be a first-time homebuyer. But if you went with Home Ready or Home Possible, there's a few others. I think Open Doors one, right? I think Open Doors one. So if you went with those programs, then you wouldn't qualify as a first-time homebuyer. However, if you went straight FHA and you were the occupant co-borrower and your mom was the non-occupant co-borrower, and you put 3.5% down, that is a doable loan. So that can happen. I hope I answered your question.
Yeah.
There's a lot going on there, man.
A lot going on.
There's all kinds of questions coming in from all the places.
Millie,
we appreciate all of you guys.
Triado. Hey guys, can you tell me what a fam load is? Farm loan is, and is it a good loan to move for buying a home?
Okay, so Millie, you cross two different legal verticals with that, because one of the verticals is, hey, this is where I live. So that's a vertical. Okay, cool. So there's a whole established system. If you don't make the payments, we can foreclose on you, and we can foreclose on your house. Now, what you're talking about is something called a Schedule F, or farm property. Farm property is a different vertical, and this is my business and how I make my living. So if you raise cows or goats or whatever you raise, and you make your living off of it, it's a different foreclosure process, which means it triggers an entirely different set of guidelines, because it's not your average, hey, I didn't make my payment and I'm gone, because not only will I take your home, I will take your home and your livelihood. And the bank knows that, so they're very cautious about getting involved in anything that is making your income for your whole life. So a Schedule F sends up flags left and right for us. Schedule F is farm income. And when we see the Schedule F, it could turn it into a whole different loan, not your regular conventional conforming loan. But a lot of loan officers don't know this, and they don't even know what they're doing. So you'll end up going, well, you don't qualify. There are ways for you to qualify. It's just a lot more difficult.
Yeah. KT, is it possible to qualify for a loan with my brother if I make $66K and he makes $40K in California? That's $104,000 combined income.
You take it.
Yes. Very
okay,
possible.
Good. Easy.
Very possible. So KT, I think it's time for a commercial.
If you need a badass loan, call Badass Loan Officer. You can reach Badass Loan Officer at the phone numbers on your screen right now. Screenshot it, because it's going to disappear in 5, 4, 3, 2, 1, 5.
Right on. LGJ is back, and he needs an opinion on the NACA program.
What do you think about the NACA program?
So, here's my opinion on the NACA program. It is a good program if you can use it. It's a good program if it helps you, and it's a good program if it makes sense for you. But know this, it's not the only program. There's a lot of programs out there. So let me share with you guys what we do. If you say, hey, Chris, Lee, we need down payment, we need closing costs, we need this, we need that. There's all these different requests, right? So what we'll do is we put the file together, credit makes sense, income makes sense, assets make sense, whatever it is, and then we go, here's the 3 different programs that you qualify for. This does this, this does this. Which one do you want to use? Could be NACA, could be a CalHFA, could be a Platinum, could be a lot of different programs. But we make sure that you understand what you can get your hands on, and then you pick for you and your family.
Could it be Shinoa?
Could be Shinoa.
How about Sapphire?
Could be Sapphire.
How about Open Door?
That's an option too.
How about Loan? I forget the other one.
That's a good one too.
My favorite one. That's a good one too.
So yeah, that's the answer to your question about when it comes to NACA. Yeah, it could be great for you, but another one could be better. So when you reach out, we'll make sure you know your data and you pick what's best.
By the way, almost all the zero down programs, all of them, you hear all these beautiful plans, zero down program, zero down program, zero down program. They all ride on a chassis, and the chassis is FHA, Fannie Mae, or Freddie Mac. All of them do. All of them sit down and go, hey, listen, I'm going to complement an FHA loan or a conventional loan or a Fannie Mae, Freddie Mac, USDA sometimes, VA even. Zero down programs do apply to VA. Hey, Navy Mom Donna, good to see you. Thank you for joining us. We appreciate you very much. We appreciate all of you guys on Facebook, Instagram, TikTok, and YouTube
Eclipse.
Answering all of your questions. What?
Tell Eclipse hi.
What's up, Eclipse?
See?
Great to see you.
All right, Ramiro Dominguez. What's the best loan for a foreclosure home? He's a rapper. You can tell. He rhymes.
All right, Ramiro Dominguez. All right, what's the best loan for a foreclosure home? I don't know what you mean. Do you mean your home got foreclosed on? Because if that's the case,
Exactly my thought.
then you are going to have guidelines. And the guidelines are going to be best case scenario. Best case scenario, FHA 2 years before you can buy again. Foreclosure's 4 years, right? 4 years? No, that's BK. Yeah, 4 years. It's going to be 4 years.
7.
Yeah, 7.
I'll double check.
7 on conventional conforming, and I think it's 4 on FHA. If you had a foreclosure. Now, if you're trying to buy a foreclosed home, that's a whole different game. Because a foreclosed home is just going to go to the market, and you just have to have a loan that's ready to go into the market so we can help you get that loan.
Yeah.
So, interest rates have gone up recently, partially because Chairman Powell is speaking. If you don't know who Chairman Powell is, this is him. He's the chairman of the Federal Reserve. And he recently said, yeah, things don't look like they're going to get better by March. All indicators are showing that things are not going to get better by March. He was on 60 Minutes like last week or a few days ago, whatever. And he said it probably won't be till the middle of the year. I'm still maintaining third quarter. I still believe we won't really see big interest rates effects till third quarter. And then, guys, hang on, because we've got so much pent-up demand. Chris and I get so many applications right now that we literally have 5 other licensed loan officers that are helping us with our files. Shout out to, name them. Martha. Jerry.
Ryan, Sean,
Dude.
Jerry, Aurora, Gordon. No,
Okay,
I didn't
cool.
get stuck.
All right, cool.
I was
Chris and Lee.
waiting for you
Yeah.
to kick in.
Chris and Lee, yeah. So we've got a lot of licensed loan officers to help you. We're all here. You can always talk to us, by the way. If you want to, you can talk to us. But we work with these people, and they'll help us with the loans. There's a lot of pent-up demand that's starting to get unleashed. Go.
All right. Doing good, Eclipse. How are you doing?
We're doing great.
One in Mexico, one again. I have a situation like Christina. However, want to borrow to buy a primary, then sell first home. Okay, so you're going to borrow against your current. I'm just assume that you're in a current home. You're going to borrow against that one, and then buy another one to live in, and then rent this one out or do something with this one later because you don't want to sell it. Is that right, a Mexico one? And if that's the case, yeah, we could do that too. That's easy.
Yeah, that's actually the easier way is going to be if you rented it prior to, because I can use that rental income to wash the mortgage. Because if I don't wash that mortgage, I got to count both mortgages against you. Let's say your mortgage is $2,500 a month and you rent it for $2,800. I can't give you the positive unless you have multiple rentals, but I can give you the washout to say I can't give you the extra $300 a month, but I can give you $2,500 covers the mortgage. So now you're only responsible for one mortgage against your income.
Tony Bowles needs to know where we're located, man.
He's located right there.
Boom.
I'm located right here.
Bam.
Cool. Riverside, California. However, we do business in all 50 states. Positive Pink says NYC.
You got that.
New York City. Yes, we love New York, and we do business in New York.
But do you do Florida?
We do Florida.
But do you do Alaska?
We do Alaska.
But what about that island way over there in the west?
Hawaii?
called
We do Hawaii. We do Hawaii.
Okay.
Tennessee, Illinois, Chicago. It's Illinois.
Chicago's not a state, but that's okay.
All right. Good.
Sandra, but we do loans there.
Yeah, we do
Sandra,
loans there.
what's the side hustle story?
Oh, dude.
What's
Okay.
even the
So
story?
the story's a good story. It's a real good story. Okay, so we're getting somebody qualified, and they're like, "Hey, Lee, I got this much income." I say, "Cool, that's awesome. By the way, I've got an extra. I think it was $40,000 in the last 3 months." I said, "40,000? Where'd that come from?" And she says, "Well, I have another job. I have a side hustle." And I say, "Cool. All I need to do is prove that you've been doing the side hustle. Then I'm able to use the income." And I said, "Okay, cool." And then she says, "Yeah, I've been doing it for about 2 years, a little over 2 years, but I haven't made money until recently. And recently, I made a lot of money." And I said, "Okay, that's awesome. That's not uncommon for us to hear." But I'm like, "Okay, cool." So we get that money, and we're like, "Okay, how can I use this?" So I said, "Well, I can use a 24-month average, which probably is not most beneficial for you in this case. Or we can pay down some of your debt and then buy down the rate a little bit and increase your buying power. And we put a little bit more to down payment." So we did that. We structured the loan that way. And I said, "This is amazing. Now you're qualified. By the way, what's your side hustle?" And she says, "I'm digital marketing." Digital marketing? What's digital marketing? I sell products online. And I say, "Wow, how much time does it take?" She said, "In the beginning, it takes a lot of time. But after that, not so much, because the systems start working for you." And I said, "No kidding." I don't know if I believe this stuff. I don't know if I believe this stuff. So I said, Chris, this is real money. We should look into it because we have a lot of clients who would like to be able to make side money. Side money. So I said, why don't you and I invest our money? And we did. We'll do everything ourselves. I've literally went through the whole course, built the websites, built everything, and we are digitally marketing on the side. We don't do it as our primary business. This is our primary business. We do loans. But about an hour every day, we dig in and we do a little bit of digital marketing. We do a little bit of maintenance. We answer questions. We help people get ahead in their digital marketing journey. And it has created income for us. It has created income. So for those who don't have a side hustle or a part-time job, we offer it to you to become working with us and digital marketing. So that's what the digital marketing story is.
You know that 2 out of 5 people in the U.S. have a side hustle?
2 out of 5?
2 out of 5.
That's badass.
Yeah, it's pretty cool.
Yeah, so do we.
Yep.
We actually have a side hustle, technically.
TikTok King!
King,
the
dude,
king
he's
is
the king.
here.
The king is in TikTok. Whoa.
Here's the king!
The king. All hail the TikTok king.
What's his name?
TikTok king.
Oh, okay. Can you educate me on using money from IRA as a first-time home buyer?
All right, TikTok king. I'm about to tell you some stuff, but
The
you
king!
but you should also.
With an
It sounded
A.
like
Kangs!
Dave Chappelle. Yeah, sounded a little like Dave Chappelle there. So, IRAs usually allow some type of withdrawal to buy a house. You got to check with your accountant, your CPA. I think it's $11,000, penalty free, but that's penalty free, not tax free. Those are two different things. You have your taxes and your penalties. So many 401ks allow for this. Some IRAs will allow the provision of borrowing against it. And then, depending on your particular setup, you may never have to pay it back because you're borrowing from yourself. So you have to check with whoever is holding your IRA and whoever is doing your taxes to see how we can use the IRA to help you buy your first home.
Boom. Cool stuff. Millie, what if you have excellent credit score, but your annual income is $27,000?
Well, Millie, all loans are driven off of income. Now, if your income is $27,000 from your job, but you have other sources of income, like child support, like alimony, like you won the lottery and they're just paying you every month $20,000 a month. If you have other sources of income, we calculate all that income. But all loans are driven off, can you pay it back? I mean, it's pretty logical. Can you pay it back? And $27,000 can't really pay a lot back with that. So we have to talk, maybe non-occupant co-borrower, maybe get your significant other in or whatever.
Okay, excellent. KT, if my brother and I make $66,000 and $45,000, that's almost exactly like the other one. And $45,000, could we qualify for a loan?
Yeah, I'm like right away. Qualify for a loan right away. It depends on what state you're in of how much purchase power you get, because states vary on property taxes and insurance. Sometimes property taxes can get really significant. I got one loan that I'm working right now. Property tax base 3.7%. That's giant.
Damn, that's huge.
In California, we're usually 1.2 unless you go to a builder. The builders are dirty birdies, and they charge a lot more.
4%,
Yeah.
man?
Cool. What do you
That's
got?
like, what's that, like 20 G's
know.
on a $6,000 home?
Raj Vinder's in the house. Raj Vinder, we
How do you
love
even
to
know?
see.
How do you even know?
See right there.
How do you even know?
She shared the live. That's
Thank
how we
her.
know.
Say
Thank
thank you,
Thank
Raj
you very
Vinder.
much, Raj Vinder.
And
You're
congratulations.
You're one of our favorite people. Why are you congratulating Raj Vinder?
Because I think she's a great person and
I
she
think
deserves
so
it.
too. I think she's a great
She
person.
deserves
Deserves
it.
it too.
Esme, is there a program even if you already own a home?
Yes, there's a lot of programs if you already own a home. Like, for instance, you're usually looking for your primary residence, good program, FHA 3.5% down. So let's just say you own that home, and that home is conventional. It's Fannie Mae, and you bought it 6 years ago. You got a good deal. Well, you're wondering, hey, can I rent this home out and get myself another home? Well, you rent it, show me the rental agreement and the money coming in, and make sure that this is going to be your primary residence that you're moving in. I can get you FHA 2-day, all day long, every day.
Dang.
Dang.
I like it. I
Every
like
day.
it.
Every day.
Gorgeous C. Marie. Can you talk about USDA
Where
loans?
are you men located? You forgot that. Tony Bows.
We answered that
Did
5
we?
minutes ago.
Man.
Dude, I jumped ahead.
Dude,
Tony
you
Bows
just- you
needed to
totally-
know, so I jumped ahead.
All right, okay. He's right there. I'm right here. And that's Riverside, California, but we do business in all 50
Earth.
states.
I'm
Can
on
we-
Earth.
He's on Earth. He's one of them
Sometimes,
weirdos. Yeah,
sometimes.
he's one of them weirdos.
But can you talk about USDA loans?
Dude, can I even talk about USDA
I'm
loan?
asking.
Can I
I'm
even talk about?
asking.
So USDA loan is a specific loan. It's geographically driven. It's zero down loan. Zero down loan. It's a pretty good loan if you can get it. Zero down loan, but the property must qualify, not just the buyer.
How do
The
I know
property.
if it qualifies?
You go to USDA.gov, you type in the physical address of where that property is, and you'll either get a green or a red.
Hey, man, you know things.
I do. And USDA is underwritten by a different underwriting system called GUS, Government Underwriting System. And not a bad loan. It's a good loan. Yeah. If your property qualifies, we'll love doing USDA loans. There's more work than an FHA, than a Fannie Mae or Freddie Mac or VA. There's a lot more work, but we don't mind it. We'll do it for you. Cool. Did I talk enough,
Not
Tony Bows?
Only is part of
gorgeous
the
C.
Federal
Marie.
Reserves, but he also owns a Corvette Z06.
Oh, shoot. How do you know? Somebody knows you, huh?
Somebody knows I work for the Federal
Somebody
Reserve.
know you work for the Federal Reserve?
Part of the Federal Reserve. Sorry, don't work for it.
Okay, got
Part
it.
of.
Okay.
KT, is there a loan we can qualify if we are trying to save by my parents' home?
Basically, all loans, because who's selling it to you is somewhat irrelevant. There is a arm's length transaction situation that I have to worry about. But if you're buying it from your parent, there's a unique thing that can happen, and we do this very often, called gift of equity. And love and affection has a monetary value, and it's very dynamic, meaning it can change to whatever. So let's say your mom owns a $500,000 house and she wants to sell it to you for $200,000. Well, then that doesn't make sense, because why? You can put it on the market and get $500,000, but you can put, hey, I want to sell it to my daughter and give the gift of equity of love and affection of $300,000. And they'll say, okay, cool. Your down payment is $300,000, love and affection, and we'll finance $200,000. Done.
Oh, nice.
Yep.
So a Mezcua 1 wants to sell their current home and put the money into a new home. That's what she meant.
We want to help you.
Let's make it happen, Mezcua.
Cool.
Have you called us yet? Have you texted us? If you haven't, you need to right now. And
Yep.
everybody, there's phone numbers here that you can screenshot and text us. And if you don't want to do any of that and you don't want to talk to us, just go to the link up top in the social media platform that you're on. Click stand.store. Click apply now.
And
you're good to go.
That's like Thanos. What do the current rates look like? Well, right now, what?
What's the weights?
What's the weights? The current rates today, if you went to the American Funding website, you would see 5.75%. It looks pretty good. Doesn't look as good as it did 2 weeks ago. 2 weeks ago it said 5.25%. But if you looked at it today, 5.7. We appreciate all the hearts. Thank you. Whoever's hearting this up, we love you very much. Thank you so much. We appreciate you. Thank you for the balloons on Instagram, for the thumbs ups on Facebook, and YouTube just doesn't like us that much for some reason. I don't know. We don't have a presence on YouTube. We're trying. We get a few watchers, but we blow it up sometimes on TikTok. We blow it up on Instagram. We do good on Facebook, but not so good on YouTube. But whatever.
Caroline Breeley.
Yeah.
I bought my home in May 2023. When would be a good time to refi?
Caroline, it's a very, very, very mathematical situation, because if you just talk to a loan officer that has commission breath, what does that mean? That means all they want is commissions. If they have commission breath, they're going to tell you every time you drop 50 basis points, it's a good idea to refi. And some truth in that, but probably long-term not the best advice, because everything runs in cycles. The chairman of the Federal Reserve says we believe we're at the peak of the last cycle, which means we're going to go down. They've actually but they've said they anticipate 3 interest rate reductions in the year of 2024, and we believe more in 2025, which means the cycle is going to go down, all the way into 25. So if you're going to refinance, you should time that where you believe the low is. Talk with your loan officer, Chris or I, and find out where you believe the low is going to be. Right now, if you asked me to peg it, I would be in the 4s. Dude, you got weird. You'd be in the 4s. And I believe that's not going to happen until 2025. So if you're going to refinance, I would say you want to do it once. When you do, you want to buy the rate down as deep as you possibly can. You need to spend a lot of money to buy that rate down. And then don't refinance again.
Ever.
Don't use it as a credit card. Unfortunately, there's a lot of people in this country who use their house as a credit card, and they refinance about every 2-3 years, and then they take the money out and they buy wave runners and boats and then new ATVs, and like, oh my God, I need more money. Well, let's just use that credit card again. It's not a really good way to build wealth long term. So, when should you refinance? Depends on the math. But if you're trying to buy a house right now and you need the funds, well, then that's a different set of math. But if you're in your forever home and you're looking for the lowest interest rate, you want to refi when you think they're the lowest based off of studying the markets and trusting some professionals, and then buy down the rate as deep as you possibly can, and then don't refinance again. So like right now, I had this situation, had to lock a loan last week, and we started the loan at 6.25%. And the client said, all right, 6.25%, do you recommend the 6.25%? And I said, no, I don't. And they said, why? And I said, because you guys make a lot of money and you're not going to have trouble making this mortgage payment. It's an easy mortgage payment for you to make. And they say, what do you recommend, Lee? And I said, well, that 6.25% is going to cost you $3,000 to get down there. You're buying down the rate. What I actually recommend is 7.825. Now, this is an engineer, very analytical person. They said, 7.825? Can you justify that? And I said, sure can. At 7.825, you're going to get back $3,000. So now, not only are you not paying $3,000, you're getting $3,000 back for a total of $6,000. When I run the math on principal and interest, the difference is about $100 a month. $100 a month means that you have 60 months to refinance. And at this interest rate environment, there's not a question of whether you might refinance. You're going to refinance. There's no question. You are going to refinance. If you get that $6,000 and you just run the straight math, if you refinance within the next 5 years, this makes it worth it. I actually think you'll be refinancing in about 12 to 18 months. The engineer sat there quiet for a little while and then said, I agree with you, Lee. Lock it at 7.825. What? That happened. Yeah, last week.
Did it really?
Real, yeah.
True
really
story?
Happened. Yep, true story.
Nice.
This happened last week.
Last
Last week. All right, cool. Where were we?
Work 1 year, was in college a year before, didn't graduate, but can I use that as 2-year work history?
You answer that.
No, unfortunately,
Yeah.
you cannot.
I didn't want to break your heart. I didn't want to break your heart.
But if you did have work
Double
history
down. Yeah.
during or before college,
Yeah.
we might be able to use that, even if there's a gap. So I
Yeah.
think it sounds like there's a gap there.
Yeah.
So
Double down. The rule is if you have a certificate or a degree, then we're able to use it. But if not, you just kind of didn't work for a year and you didn't even finish what you started. That's how the underwriters look at it.
Ayana, once your credit is ran in the initial phase, is it ran again before closing?
Oh, good question, Ayana. Ayana. So, yeah, but not a full credit run. They call it a refresh. And the reason they run a refresh is because they want to make sure you can afford this house on the final day before they fund it. Because if you went out and bought a Cadillac the day before funding, we got to put in that $1,000 a month payment and you don't qualify anymore. So they do a credit refresh. They also call your job. They go, hey, listen.
Did Chris clock in?
Yeah, is Chris there today? They're like, yeah, why? Never mind. And they hang up. It doesn't go like that. But they want to make sure that you're still employed and that your credit hasn't changed dramatically at closing because they're about to push the fund button and all kinds of money is going to transfer all over the world.
Crazy.
Cool.
Can you break down how HELOCs work, please?
You do that.
All right. So it's kind of like a credit card. So here's what you're going to do. Is that when you apply for a HELOC, you apply for an amount. So 10,000, 20,000, 100,000. And if you get approved for that amount, different companies work different because we broker some of them we do in-house. So some will give you the whole 100 grand. Some will give you a line of credit. Some will only have it open and available for 1, 2, 3 years. it also works like a credit card. So let's just say you got $100,000 once again, and you used all $100,000, but then you paid off $50,000. So now your balance is back down to 50. So you're only making a payment on that 50, but you need another 10, so you use another 10. But now you paid on 20, so now you owe 40. So it works just like a credit card.
Yep. Home equity line of credit. Home
correct.
equity line of credit. Yep.
So I'll do this Lee Duran way.
Okay.
HELOC. It's home equity line of credit. Okay. Is that how you do it?
No.
Okay.
I do
Pretty
it
close.
way cooler.
Much more gay.
Way cooler.
So that's basically it. It's not that hard of a thing to do.
Yep.
It's pretty easy. You can know in 5 minutes whether you qualify or not. But hope that helps. If
Yep.
that's not enough data, give us a call. We'll
Cool.
definitely cover more with you. Raj Vinder said maybe she should become a digital marketer.
Maybe.
You're gonna be a billionaire, young lady. I just know it.
Yeah,
I just know
You're
it.
gonna have all kinds of houses. You're gonna have all kinds of wonderful things in your future. We're confident of that.
She's a hustler.
William West followed the host. We appreciate you, William West. We appreciate you, Liz. Scored 694. I made 124,000. Hats off to you, Liz. What do you do? Hats off to you, Liz.
No debt.
What do you do? Hats off to you, Liz. What do you do? 124,000. You would probably be starting at 575 to 590. Yeah, that's where you start, and then we probably go up from there. But it depends on your debt, and you said no debt, so we could go up.
I know you were helping all 50 states and Hawaii and
Yep.
Florida and
Yep.
Alaska,
Yep.
but do you even help in Northern California?
We just opened escrow in Northern California
Woo!
today, Northern California.
Man, Yoni?
Yoni.
You're probably better.
Yoni. Nah, Yoni's good. Yoni, I like the Rockets too. Yoni.
For
You
score
get
is $550, and she makes $80,000 a year.
$550 and $80,000 a year. 550 is going to be a problem, Yoni. We got to talk about that. Why? Because FHA starts at 580. Conventional conforming, which is Fannie Mae and Freddie Mac, 620. So your 550 FICO is going to be a problem, except for two cases. Two. One of them is FHA. If you put more than 10% down, we might be able to do 550.
Yeah.
Might. Or VA, if you're a veteran, then we might be able to do 550. So those are two things that we have to take into consideration.
Only for Yoni.
Only for Yoni.
Raj Vinder giving us roses and stuff.
What's up, Roses? We love you.
Do you do doctor loans?
Do we doctor? So doctor loans, usually banks are kind of bullshitting when they say doctor loans because a doctor's an income and usually a very good income.
So you get discounts.
Yeah, it's a very good income. But the banks, they kind of say, hey, listen, if you come to us, well, for doctors, we waive the appraisal. It's a little bit of a sales spin, and it may actually help you. But if you're a doctor, yeah, we'll get you one.
We have them.
Yep.
William West, thank you for amazing coaching.
We're here for you, William West. I hope you're a loan officer or if you're just a home buyer, either way.
Are you doing our loan coaching or are you talking about this stuff?
Yeah, cool.
That makes 0 cents, pal.
All
says
right,
Andy
the goat. Andy, come on.
Get
You make it
ready.
interesting.
0
We love you
cents.
guys, man. We love you. Andy the
No.
goat. Tell me what makes 0 cents, pal.
No. 0 cents. Makes 0 cents.
Since. Oh, right, since. That makes 0 cents. Oh, 0 cents. Pal? 0 cents, pal.
Maybe that's code.
0 cents,
Is that
pal.
code, Andy
Yeah.
the goat?
PAL.
Kuru.
Kuru.
Why are your rates so low?
Why are my rates so low? They're not my rates. They're New American Funding's rates.
But they
I
thought
work
the
for
average
the bank.
was 7.
I work for the bank. Well, the truth is, here's what New American Funding does. They do what every bank does. They do what every car dealership does. They say, hey, this is the absolute best case scenario in the whole world. If you don't believe that, go to the top where our links are. Go to Cool Stuff, and you'll see today's rates. Those rates, if you go there, you're going to see little asterisks, and they're going to say, you must have an 800 plus FICO score. You must be putting 40% down, and you must have a 24 DTI. So it's a perfect scenario that New American Funding puts out. That is not your quote. The only way I can give you your quote is to pull your credit, calculate your income, check your assets, and then give you your quote. Whatever your quote is, I can promise you there will be a matrix. The matrix will probably go from 5.875 all the way up to 8.5. So you could choose any of those. But what we're talking about is what's the par rate? How much does it cost you to get in no cost, no benefit? And then from there, we math it all out. It's not just a straightforward situation.
But
So
Andy the Goat said 575 is horrible.
575 is horrible. Andy the Goat says 575 is horrible. Andy, tell us why. Tell us why.
Rena Forever Love. You guys are wonderful. You have helped me a lot in my home buying, but I have a question.
Okay.
What happens when your lender doesn't do down payment assistance?
You better call us fast.
Yeah.
Like stat. If you were in a hospital,
Hurry,
I would say get Kristen Lee stat.
hurry,
Beep. Boom.
hurry.
Boom. Yeah.
Andy
Get
the
Kristen
Goat.
Lee.
Of course, Jerome said that he's trying to save Joe Biden. Rates will go back up because of inflation. No, you cannot justify a 7.285.
Oh, Andy the Goat. Oh, we love it. I gotta dig in Andy the Goat. We gotta figure out who this. Did you already do this? We gotta figure out who Andy the Goat is. We
Better
gotta have
ways
some
of
fun.
using my
I
time.
love going for these three. I love going to these people, man. I love it. Cool. Andy the Goat, keep chiming in, man. I can justify, I can math everything. And here's the thing I tell people. If you're looking for a good loan officer or a good realtor, go to somebody who's not afraid to actually put everything out there in public. If somebody puts it out there in public, they got to defend it. If we're out here, like I have a license, my NMLS number is 944254. What's yours?
1066958.
So we have NMLS numbers that we earned and we have to protect. So we have to give honest, good guidance, or else our numbers are going to be punched. I've had an MLS since they started NMLS. And I got my first license in 1992, which is a securities license, a stockbroker's license. I can tell you that I work really hard to make sure I know what the heck I'm talking about. Andy the Goat. Love you, though. I love you. Cool.
Mr. Bigglesworth, why should I buy? I've been sitting on the sidelines due to Northern VA market and rates.
Okay, so Mr. Bigglesworth. I like that. Do you remember who Mr. Bigglesworth
cat.
is? Yeah.
It's hairless.
Hairless? You're right. Dude. Dr. No. No, it wasn't Dr. No. It was Dr. Who?
Evil.
Dr. Evil. Dr. Evil. Okay, so Mr. Bigglesworth, here's a little economic lesson, okay? Here we go. It's gonna be a good one. So you better hang on, get some popcorn, because Mr. Bigglesworth, we're about to go into this. All right? So the Federal Reserve has to control the economy. They're trying the best they possibly can, and the way that they do it is through the prime interest rate. Right? Right now, the prime interest rate is 5.25 and 5.5. That is set by the Federal Reserve. The chairman of the Federal Reserve is Jerome Powell. They are gauging the economy, and they take a lot of factors into place. Now, when they did that, the markets respond, and the yield responds. All mortgage rates are based off the 10-year yield. And traditionally, there's 100 to 150 basis point spread between the 10-year yield and the mortgage rate. However, when there is uncertainty in the market, it got really wide, up to 250 basis points for a long time, which means interest rates are at about 8% for a while. 8% interest rates means that anybody who was thinking about buying a house said, you know what, I'm going to back off a little bit. I'm going to wait.
Back off.
But that doesn't change the fact that they want to buy a house. And that's called pent-up demand. Now, let's just say every month there's 30,000 people who wanted to buy a house across America, but they said, I'm going to wait till the interest rates go down. So they did that last month and the month before. We have 18 months of pent-up demand right now. Dang. 18 months of pent-up demand. As soon as interest rates go down, everybody out there is thinking the same thing. Now I can buy more. Okay, cool. So that's going to be a buyer influx, a ridiculous buyer influx. So let me give you the state of the market right now at this moment. If you put a house on the market for $500,000 and the market is $500,000 for that house, days on the market are going to be 30, 45, 60, 90 days in some cases. So now let's just say you want to move from California to Florida and your house has been on the market for 45 days and you finally get an offer. And that offer says, hey, listen, I'll buy your house for $500,000, but I want a $10,000 discount. They don't say $10,000 discount. They say, I want you to cover closing costs. But now you as the seller have to go, all right, let me think about this. I really want to move to Florida, but I don't want to lose $10,000, but I really want to move to Florida. Oh, what the heck? I'll take your offer at full price, $500,000 plus cover closing costs. So now that substantiates the current market. And he's been on the market for 45 days. But as soon as that pent-up demand comes in, as soon as all that 18 months of pent-up demand comes in, that house is going on the market for $500,000. And that weekend, that first weekend, the realtor's going to hold an open house. And that Monday, they're going to have 10 offers. Why? Because there's a lot of people shopping now because rates are down. And those 10 offers, they're going to be 3 are going to be, hey, I'm a real shrewd negotiator. I'm going to come in for 480,000. That's 3 of them. 3 of them are going to come in at market with some conditions, and then 3 of them are going to come in above market. Now, if you were the seller, what would you do with those ones that came in 20 below market? You do what every seller does. You'd say, hey, thank you very much. And then you can tell the rookies by their, aren't you going to counter? No, not really. Don't care. Thank you. Have a good day. What, you have to counter. No, I don't. You gave me your highest and best. That's it. I believe you. Buy. Well, can we re-offer? Too late. There's already somebody else in here. So there's the ones at market. We're going to go, okay, let's look at those. But let's first look at the ones that came in above market. And now some guy says, hey, listen, I know you want 500, but I'll give you 510 in a 21-day closing. And I'll cover all my closing costs. Now, the seller says, you know what? I'll take 510 and 21 days. Thank you very much. Once that gets put in the books, it is now established a new market price, which is 510,000. This is economics 101. So once that's there, the market will bear a higher price. So the neighbor that puts his house on the market is not putting it on for 500,000. He's putting it on for 510, and it repeats itself until the market shifts again. That's what happens.
Boom. Does Zelle payment make to my personal account matter if I'm doing a bank statement loan?
You take that.
Nope. Just show us your deposits, man. Just show us your deposits and we'll make it happen.
No.
Andy the Goat. This video is not live.
Oh, you're right, Andy the Goat. It's not live. Oh, Andy the
video.
Goat. We got smart people in this house,
No,
man.
I think he got sad because we didn't answer him. We thought he was. We were
Oh
annoying.
yeah, Andy the Goat.
Caught
It's not.
feelings.
Yeah, it's a pre-recorded video.
You can't catch feelings, bro.
Andy, dude, you can't catch feelings. You can't, dude.
But Liz has a tree service by the Bay Area.
Dude, we can do something with a tree service. Oh no, she was asking, what do you do? That's badass. You're making that kind of money with the tree service? Shit, I'm jealous. Straight jealous. Who do I call? You can call either one of us.
Only the Yoni. She just left and returned in time.
Ow, Yoni. Only the
Bigglesworth is
Yoni.
back with his 300K income.
Damn,
Where is
300K.
the safe mortgage range, 1 income, 4 people household? Where
I don't
is
even know
the
what that means.
safe
You
mortgage
answer
range?
that.
300 safe mortgage range? Buy house cash. 300 income, dude. You can afford anything you want, basically.
Yeah,
but I would reasonably say that at $300,000 a year, you're probably netting, what is that, 20 grand a month?
You're a million. You're in a million plus.
I mean, netting?
Yeah.
Netting?
You're a million plus.
I mean, get whatever you want, dude.
Yeah, dude. Yeah. At that income level, 300K, million all day long. Well, I will tell you that when you get to those higher loans, things start to change because we have what's called a conventional conforming loan limit, which is set by the county. And then beyond that, it's called high balance. And then once you pass high balance, we go to jumbo. Jumbo loans are very difficult because you need, when you're going for like a $3 million house, they're not, hey, 3.5% down. No, you need a minimum of 10%. You probably need 20% when you get to that big of a loan. But they're like, if you're buying that kind of house, you should have that kind of money.
Yep. Diablo Mortgage, shoot your question, man. Let's see what
Cool.
we got.
We're here for you, Diablo. Diablo, we want to help you.
We have a 3.4 rate with wife wants to sell. Rate is now 6.5. Should we sell?
3.4. That's a great rate, man.
You know
that's
what automatically comes to mind?
That's a what?
Happy wife, happy life.
Dude, yeah. It's going to be a math out thing, and whether or not, like if you have a 3.4 in a really, really bad neighborhood and it's horrible and you don't like life, then things are more important than money. But if you have a 3.4 and you can get that thing to debt service by renting it, whoo, that's probably a good thing because that renter will be paying off your mortgage while you pay off the next mortgage. So it's going to be a lot Vegeta.
And if you're okay with just holding that larger payment with a 6.5 for a little longer,
yeah.
I mean, you're not in yet, obviously, but let's say you held it for a year and then refinanced out of it. I don't know if you'll hit 3.4 again, but refinance out of it, be in a better situation. Wife is happy. That's a thought.
Cool.
Mammy of Zero. Mommy of Zero.
Mammy of Zero.
Mammy. We've seen her yesterday.
Mammy of Zero.
759 FICO score today. Is it good to buy a home? No credit, no debt.
Yeah, like if you're a buyer and you have the ability to buy right now, this is probably, I mean, it's hard to understand this, but it's probably the best time to buy because it is a buyer's market right now. It absolutely is a buyer's market.
Is it really?
Yeah, absolutely.
Chubella, how much you gotta make to make a month? How much you have to make a month to get a house? There you
Well, Chubella, if you made 40,000 in certain parts of the country, yes. In certain parts of the country, you need 100 grand. If you're in LA, you need to make $125 just to get into anything for sale in LA. But if you're in parts of Arkansas, you can make 40, 50 grand to buy a house. So it depends on where you're at and what your situation is.
All right. Kenny Ray.
Kenny Ray.
Need help with a HELOC. I don't know what to do with my equity. Scared to get behind or in debt.
You take that.
All right. So do me a favor. Just give us a call. Let's talk about it. Let's figure out where you're at, what you're doing, what your goals are. And we'll be honest. If it's not a good move, we'll say no.
Yeah.
And some people get mad at us and say, I want to do it anyways. And they go to other banks and get it done. But that's okay. I mean, we'll give you an honest opinion and let you know if it's a good move or not. And if you feel safe, you move forward. If you don't feel safe, that's okay.
I love this guy's name, man. Invincible Snoopy. Invincible Snoopy. I dig that. Dude, I grew up on Snoopy.
He said
Peanuts, yeah. Invincible Snoopy. I dig that name. We're here for you guys.
You guys are great. Mr. Bigglesworth said, made my drive home and fun.
All right, we're here for you. Mammy,
welcome.
thank you guys here in Texas.
Robert.
Texas. We love Texas.
Robert Escobedo.
Yeah, Robert. Texas might be its own country real soon if you follow the news.
All right. Two more questions and we're out.
Whoa, were we there? No way, are we at that? Oh, dude, we're already there.
$120,000 a year, Texas. What can I afford?
120.
You
You're starting $500,000. $500,000.
Texas, probably.
Yeah, get a hold of us. $500,000. Let's make it work.
Kenny Ray.
Kenny Ray,
You're welcome,
Texas.
Invincible.
Yeah.
Mo, should I lock in my rates right now or wait? New build closing end of July, August.
Oh, Mo.
Lock alert today.
Mo, yeah. Well, if you follow the Federal Reserve, we actually believe that the interest rate reductions are going to happen third quarter, which is right when you close third quarter, which means there's going to be a drop in interest rates. We believe that. But here's the scary part. If we're wrong and it goes up, you can't change that.
Nope.
So one thing you can do, if you did a 90-day loan lock, we can do 90, right? Can we do longer? 90-day loan lock. But if you go that far out for a loan lock, it's going to cost you a lot. There's cost for extending that price.
All right, let's give him what Lee would do and what Chris would do. What would Lee do?
Lock
or float?
I would float.
I'd float too.
I'd float all day long.
No lock.
I'd
I wouldn't
float.
lock.
Yeah.
I wouldn't lock.
If you were my client and we were doing this, I would not lock. I would not lock. With that much time, time value counts a lot.
Yep.
A lot. Invincible Snoopy says Chicago. I don't know if you're asking if we do business there or you're just saying, hey, Chicago's badass. I was in Chicago not that long ago. Cold there sometimes. Like ridiculous cold. Like I went to the water, really cold
That's the second
in
time
Chicago.
We've heard that. Mom said they're offering 5K credit to lock.
5K credit. Oh, I don't know about that. Yeah, I don't know about that. I would be because 5K when it comes to locks is not that much.
Maybe
I know
it
sounds like a lot, but it's not that much. And they probably just want to lock you in so you don't shop loan officers. By the way, we beat builders often. We built one. We beat a builder, and I actually think the viewers watching us right now, we beat the builder, smacked them around, got them into a new house, closed on it. They're happy.
Commercial.
Cool. Yeah. If you need a badass loan, call Badass Loan Officer. You can reach a badass loan officer by calling the numbers on the screen. Chris and Lee are your badass loan officers at New American Funding. Anyway, we appreciate you guys. We've been Chris and Lee. We will be back.